Welcome everyone. My name is Eric Johnson. I'm the Digital Marketing Analyst here at Paragon Solutions, and I will be your webinar host for today. I want to personally thank you all for joining us for today's webinar titled Understanding the 2014 CGDP Invoice Process Changes, What You Need to Know. Before we get started, I would like to go over a few housekeeping details. When you initially logged in, a control panel appeared usually on the right side of your screen. This control panel can be closed and opened at any time during the webinar by clicking the red arrow button found towards the top left of the panel. Use the questions panel to submit questions anytime during the webinar. We will hold all questions until the end. If time does not allow us to answer every question, we will respond to you directly. This webinar will be recorded and a link will be emailed to you within 48 hours. You will also be able to find it on our website listed here. Finally, there will be a short survey at the end of the webinar that takes approximately 2 to 3 minutes to complete. If you have the time, we would appreciate your feedback so that we can continually provide value and ensure that the topics are relevant to you. Before we get started, I'd like to provide a brief introduction to Paragon Solutions and today's speaker. Paragon is a professional services firm providing a full spectrum of consulting services from advisory through solution design and implementation for tighter alignment between business and IT. We focus on building solutions that address our clients' specific needs. We are headquartered in Cranford, New Jersey, and have offices throughout the U.S. and Europe. Paragon has been in business for over 30 years, building industry and domain expertise in the life sciences, financial services, communications, healthcare, and insurance industries. Our presenter today is Shannon Bermudez. Shannon is a principal consultant in the revenue management practice under the life sciences vertical at Paragon Solutions. Throughout Shannon's 15 years in the life sciences and pharmaceutical industry, she has developed both practical and strategic subject matter expertise in the pricing and contracting area. At the launch of the HCR Coverage Gap Discount Program, Shannon led the implementation of a custom-built solution to manage the operational processing. The solution was holistic and comprised both business and technical processes. Without further delay, I'd like to turn it over to Shannon.
Thank you, Eric, and good afternoon to everyone on the call. Thank you for taking the time to join us this afternoon. As Eric mentioned, the title of this webinar is Understanding the 2014 CGDP Invoice Process Changes. The changes referenced are those specific to the negative invoice reconciliation process. During this webinar, we will review the current state of the new plan for this phase. Additionally, we will review the resulting quarterly invoice process changes. What you'll take away from this webinar is an understanding of what to expect, what you'll be required to do, and how to prepare for each of the phases. We will also go into detail on the business process impact of these changes. So without further ado, let's begin. First, we are going to review the current state of the negative invoice reconciliation. First, I want to clarify that the negative invoices we are referring to here are the negative invoices manufacturers received only quarterly invoices for due to deleted or adjusted PDE claims. So let's discuss the initial plan. Initially, CMS announced a plan in July 2013 to reconcile negative invoices that were accumulated between 1Q11 and 4Q13 invoice quarters. Initially, the plan was to distribute 2 negative invoice reports, one in October 2013 and the following in April 2014. Accordingly, the first set of reports were distributed on October 31st, 2013. However, the reports were erroneous. In some cases, the amounts were wrong, there were issues with the labeler transfers, and other various issues with the reports. In 2013, November 2013, the TPA sent 2 separate notices to manufacturers to distribute these negative invoice reports, to disregard these negative invoice reports. Additionally, they confirmed that the plan sponsors should not have sent payment to manufacturers on account of these reports. As such, if your organization received funds related to these reports, you need to contact the TPA for assistance in returning these funds. As a result of the erroneous report, CMS rolled out a new plan during the January 2014 webinar. It is important to note that CMS has created a new name for the new plan. As if you're looking for information on the TPA's website, you will find this title under Invoice Reconciliation Negative Balance Solution. For the remainder of this webinar, we will focus on reviewing the breakout of the new plan for the negative balance solution. As you'll see illustrated on this slide, the new plan that CMS has announced for the negative balance solution is a two-phased approach. The first phase referred to on the slide as Phase 1 will reconcile negative invoices accrued between 1Q11 and 4Q13 invoice quarters. The second phase referred to on the slide as Phase 2 is a long-term solution for reconciling ongoing negative invoices, beginning with a 1Q14 invoice quarter. For simplicity, during this webinar, we are going to refer to these phases accordingly as Phase 1 and Phase 2. The next few slides will focus on these two phases separately, beginning with Phase 1. Later in the presentation, we will review how these phases will intersect and begin to overlap. So let's walk through what to expect for the Phase 1 negative invoice reconciliation process. On April 17, 2014, the TPA will distribute collective invoice reconciliation reports for negative invoices accrued during the 1Q11 and 4Q13 invoice quarters. This is a one-time event. However, to put this in perspective, this is to reconcile 3 years or 12 quarters worth of negative invoices. While this seems like a lot, we understand some manufacturers are affected more than others. It is important to note that all manufacturers will receive these reports. That means even if your organization did not accrue negative invoices during these invoice quarters, you will still receive these reports. The plan sponsors will be required to submit EFT payment to manufacturers for the negative invoices identified on these reports. The EFT payments must be sent within 38 days from the distribution of these reports. So this means manufacturers can expect to receive EFT fund payments for these approximately anywhere between April 17th and May 25th. So let's move on to what you as the manufacturer will be required to do. There are two high-level areas you will need to focus on to reconcile negative invoice payments during Phase 1. Let's take a look at the first area, tracking receipt of funds. Once you receive the reports from the TPA, the first thing you need to do is to begin tracking the receipt of funds through your organization's AR system. As your organization begins to receive these funds, you'll need to begin reconciling the funds that you've received to the expected funds per the negative invoice reports. As you move along in this reconciliation process during the 38-day payment cycle, you'll need to summarize variances and discrepancies. This information, in turn, will feed the data for the second high-level area, confirming receipt of funds. Similar to the regular quarterly invoice process, you will be required to generate and send payment confirmation report to the TPA within 5 days of the end of the 38-day payment cycle. However, differently than the regular quarterly invoice process, you will be confirming that your organization received the funds or did not receive the funds for the negative invoice payments, as noted on the negative reports distributed by the TPA on April 17th. It's important to note again from that statement that you will be required to confirm if you did or did not receive funds for the negative invoice payments. The TPA has provided specific instruction on how funds received or not received should be confirmed. So let me go into a little detail on that. If the expected funds or any funds are received per the reports, the confirmation report should note that applicable dollar amount. If expected funds are not received per the reports, the confirmation report should note $0 received. All amounts must be confirmed, even $0. If negative amounts did not exist for your organization during this time frame, you're still required to generate and send a confirmation report and confirm that you received $0. So let's just level set what we have reviewed so far. We walked through Phase 1 and what to expect and what you'll be required to do related to that phase. We will now walk through those same areas for Phase 2. So let's take a look at what to expect for Phase 2. As in the past, you will continue to see negative invoice amounts invoiced on the standard quarterly invoices. However, what is different is as of the 1Q14 invoice quarter, the balances for these negative invoices will be resolved within the quarter they are invoiced. They will not be carried over into future quarters. This will prevent the need to reconcile multiple quarters at a time as we saw in Phase 1. What this means is that plan sponsors will be required to send EFT funds to manufacturers during the 38-day quarterly invoicing processing window for the negative invoices that were reported. This will also result in the need for manufacturers to track and confirm receipt of these funds during the quarterly invoice process. This in turn results in changes to this process. This will apply to the 1Q14 invoice quarter and all future quarters. So let's take a look at what's new. What's new here is really an additive change for manufacturers. As we reviewed on the previous slide, as of 1Q14, negative invoices will be resolved in the invoice quarter they are reported. This now means that EFT funds will flow both ways during a given invoice quarter and during the same 38-day processing window. For negative invoices, plan sponsors will send EFT payments to manufacturers. And as per the standard quarterly invoice process for positive invoices, manufacturers will send EFT payments to plan sponsors. The key here is that funds from plan sponsors for negative invoices can come in anywhere during the 38-day payment cycle. You should also be receiving funds from multiple sponsors for different invoices. For example, funds could come in one day from sponsor A, day 15 from another sponsor, and day 38 from another sponsor. This is why it will be imperative to implement a process to thoroughly track the receipt of these funds so you can properly confirm that payment was received or not received accordingly. So on the next slide, we're just reiterating here that all the other major components of the quarterly invoice process will remain the same. The file formats, layouts, timelines and deadlines related to submissions, timelines and deadlines related to payment, and the payment confirmation report are all the same. The dispute process will also remain the same. So let's take a look at what you'll be required to do for Phase 2 of negative balance solution, which is in effect as of the 1Q14 invoice quarter and will be applicable in all future quarters. As per the standard quarterly invoice process, you'll need to process positive invoice payments within the 38-day processing deadline and confirm payments within 5 days of the end of the deadline or the 43rd day. Additionally, in 2014, you will also need to track receipt of negative invoice payments within that same 38-day processing timeline and confirm receipt of payment or non-payment for negative invoices within 5 days of the end of that deadline. A few considerations here. Based on the quarterly invoice reports, you will prepare the payment confirmation report and confirm both negative and positive payments accordingly. As we reviewed previously in this presentation, you'll want to confirm receipt of payment or non-payment accordingly on the payment confirmation report. We will review this further during the business process impact later in the presentation. So far we've reviewed in detail what changes are coming as a result of the negative balance solution Phase 1 and Phase 2. So let's review in detail how to prepare your organization for these process changes. The first area we will review is a process to receive and translate negative balance reports. This is specific to Phase 1. Some of you may have already completed this step in preparation for the reports that were previously distributed in October 2013. In the event you have not, let's quickly review the high-level areas you'll need to review to complete this preparation step. You'll first need to download the file formats samples from the TPA's website. You'll need to evaluate the file formats and determine applicable changes to your processes. Consider the following when evaluating file formats for potential system and process changes: the ability to load, translate the files, and a means to summarize expected negative invoice payments. If your process is automated or manual, the high-level requirements will remain the same here. You'll either be updating your systems or your processes to translate and summarize data for tracking. Since this is a one-time event, you may want to consider just handling this as a one-off process. Either way, you'll need to implement applicable changes to update your systems or to update your processes, or both, in order to support the processing of negative invoices for this phase. The remaining areas we will review here apply to both Phase 1 and Phase 2 negative balance solution. The second area we will review is a process to receive funds for payment of negative invoices. You'll need to set up an account to receive funds from sponsors via EFT. For ease of tracking receipt, some manufacturers have chosen to set up new accounts just for the receipt of CGDP negative invoice payments. Secondly, you'll need to provide the applicable EFT banking information to the TPA. The TPA reported in the January 2014 webinar that several manufacturers still have not provided EFT information in order to receive payment for the negative invoices. The last area here is to ensure your organization's AR system is equipped to handle and quickly identify receipt of CGDP negative invoice payments. This may require updates to your AR system or simply updates to your AR processes. Either way, your organization needs to complete this evaluation to assess required changes. The third area we will review is an AR process to track receipt of EFT funds for negative invoice payments from sponsors. The first imperative step here is to identify and appropriately allocate resources to support this effort. CGDP timeline is an aggressive timeline, and allocating resources will be the first step in ensuring your organization meets the deadlines. Secondly, reports should be created to summarize the funds that are expected to be received for the invoice quarter as per the quarterly reports. These reports should be provided to the AR representative to support the tracking and overall reconciliation process. Most importantly here, you should define the overall AR process to track receipt of funds. You should consider the following when defining this process: how funds will be received, how they will be identified as CGDP payments, how often you will check for them during the 38-day period, reports that you will use, inter-organization communication process. And additionally, as a part of this process, you will also want to define the overall process timeline for your organization. You should also establish a service level agreement for cross-functional areas. The CGDP processing is an aggressive timeline. Thus, establishing and following a defined process timeline and SLA will help ensure your organization meets the overall deadlines. Implementing a reconciliation process is a key step between tracking and confirming. There are a few high-level pieces in your reconciliation process we'd like to call out. Evaluating funds expected versus actual funds received. The reports you choose to establish will be key to supporting this process. You'll want to be able to identify payments you expect to receive for the negative invoice reports and payments you actually receive for your AR system. Creating reports to bridge these areas will help to support an efficient reconciliation process. The next area, internal tracking of negative invoices versus TPA tracking of negative invoices, may be more applicable at this time to Phase 1, but this could become more relevant in the future if your organization doesn't receive the funds you're expecting for payment. This is simply a process to compare internal tracking of negative invoices to the TPA's tracking of negative invoices for your organization. In the event you find discrepancies or variances, you'll want to contact the TPA ASAP to address. For both of these areas, you'll want to summarize and report variances. This will help feed the payment confirmation report or support follow-up with the TPA on issues with invoice reports. The last area here that you'll want to implement is a process to confirm receipt of payments. For Phase 1, you will create a payment confirmation report to confirm receipt of payment of negative payments or non-payments of negative invoices. For Phase 2, you will confirm payment or non-payment of negative invoices within the standard quarterly payment confirmation reports. Based on the quarterly invoice reports, you will prepare the payment confirmation report and confirm both negative and positive payments accordingly. As we reviewed previously in this presentation, you'll want to confirm receipt of payment or non-payment accordingly on the payment confirmation report. So this slide will show you the major areas that will impact your business process. Essentially, the first block listed processing overlap really carries over to each area and is the cause of the business process impact in the majority of the areas. We're just going to go over a few high-level points within each of these areas of what you'll consider for business process impact. So processing overlap is specifically related to the Phase 1 and Phase 2 quarterly invoice process and the Phase 2 negative balance solution and the standard quarterly invoice process. So I just want to go over a few points of the processing overlap there. There will be a processing overlap between Phase 1 negative invoice reconciliation and quarterly invoice processing. As of 1Q14, the Phase 2 negative balance solution is part of the quarterly invoice process. Thus, as of 1Q14 invoice quarter, the processing time frame for receiving funds for negative invoices and preparing and sending funds for positive invoice payments is within the same 38-day timeline. Additionally, Phase 1 negative invoices and Phase 2 negative invoices could be received during that same overlapping time frame. The next slide will show emphasis on the overlap so you'll understand the impact of that. The EFT funds tracking. So you'll need to track receipt of negative invoice payments. Since the processing time for Phase 1 negative invoice reconciliation process and 1Q14 quarterly invoice process overlaps, you could receive negative invoice payments during the same time frame, more confusingly on the same day. You could receive EFT funds for Phase 1 and Phase 2 negative invoices at the same time for the same contract ID, but they will need to be tracked and confirmed separately. Therefore, you want to ensure an identifier is part of your EFT submission process and noted in your AR system accordingly. The payment confirmation reports, you're going to have to prepare multiple reports based on how you'll confirm the negative invoices you received or not received. You'll have to potentially make manual updates to these reports. And you'll also be now confirming payments that you've sent out and payments that you've received in. Another thing that's very important to note here is that if you typically process payments and send the payment confirmation report prior to the 38-day payment deadline, you'll want to reevaluate your process to determine the best time to prepare the payment confirmation report. Even if you completed the processing of negative invoice or positive invoice payments, given you can potentially receive funds for negative invoice payments up to the 38th day, you'll need to confirm that appropriately. The TPA did announce on January 2014 webinar that they would accept replacement payment confirmation reports if you sent a confirmation report prior to the end of the 38-day cycle. So this specifically means if you pay typically by the 30th day of the cycle, you send your payment confirmation report because you want to close that out very quickly. You could still receive negative invoices up to the 38th day. So you'll need to send an updated payment confirmation report if that occurs. If you check your process and you've received all of the payments for the negative invoices and you've paid all of the positive invoice payments, then you'll be free to send it early. It just is a matter of your process, but you need to consider that within your process so that you can account for that. I think it goes without saying that all of this additional processing in the same aggressive 38-day time frame is going to result in resource and time constraints for your organization. So that's just a key consideration here. So the next slide I'm going to go over, excuse me, was prepared to illustrate all the activities that will be occurring during the Phase 1 negative invoice reconciliation processing and the 1Q14 quarterly invoice processing as a result of the negative balance solution we just reviewed in detail. So the image provides a visual perspective of the processing overlap we just discussed between both phases as well as within the standard quarterly invoice process. You can see that the overall timing and resource constraints that can result from this. Much of the overlap is in processing will begin late April 2014, early May 2014. But I felt that this really gives a visual perspective of what you're going to be facing in the next few months to manage the coverage gap discount program processing of negative invoices and standard quarterly invoice process. Again, you'll have access to this information to review later. Lastly, I just want to go over at minimum what we feel each manufacturer should have in place regardless of size to support these areas in order to be successful and ensure the compliance of the coverage gap discount program. I'm not going to go over these in detail. I just wanted to note that the last portion of the slide is mainly the additives that came as a result of the negative balance solution that the TPA announced. The next slide is just some helpful links that you probably already have, but if you don't, this is the link to the TPA site and the final notice for the negative invoice process. It's also available on the TPA site. But this will have information you need to prepare for this. So that concludes the portion of the webinar of my review on these invoice process changes. But it opens up for Q&A. I just want to note, if we don't get to your question during the webinar, we will reach out to you directly with the answer. So let me just get a second. You can feel free to, as Eric had mentioned, add your questions. Just give me a second to filter through these questions. So the first question, how can we confirm that the TPA has successfully received our EFT information for the negative balance process? So according to the TPA, you can confirm that the EFT information was successfully received by calling or emailing TPA operations staff who can confirm and verify receipt of the form. The TPA can be reached at 1-877-534-2772 and select option 1. And I'll repeat that for you. I'm sure you should have it. It's 1-877-534-2772, option 1, or by email at tpaoperations@tpaadminister.com. The second question is, how can we learn of any file format or layout changes that will be needed to support of the negative invoice process? So the file formats are available on the TPA's website, and as I previously mentioned, under Invoice Reconciliation Information area of the website. That link is provided here, so when this recorded slide is distributed, you'll have access to that link. Okay. The third question. Do you know how disputes are handled in a case where a formal dispute to a quarterly invoice was upheld or the amount of the negative invoice does not agree with the manufacturer's records? So the answer to that question is that all we really know at this point is CMS is in the process of developing guidance to address disputes for this process. So we can only suggest that you monitor the TPA's website under the listserv area for updates on this topic. I wish we had more information on that, but it's going to be a waiting process until the CMS can distribute guidance. So is this confirmation report in the same format for the reconciliation process? I'm not really sure what, so there's, I'm assuming you're referring, so let me just go, phase 1 confirmation report. The file format for the phase 1 negative balance solution is a different file format, and that again is available in the invoice reconciliation information area of the TPA's website. That's the file format. Now, the phase 2 will be based on the standard payment confirmation report format. So that will remain the same. What you'll need to evaluate is the changes for phase 1, which will be those 3 years worth of quarterly negative invoices, or 12 quarters, where you'll have to adjudicate those. That is a different format than the standard quarterly invoice process. So I hope that answered your question. If not, we can always follow up with me based on my contact information. So let me go through another question here. For phase 2, what if the manufacturer never receives the EFT from the plan? How does that impact subsequent invoices? That's another item where it's, that's really going to be a new area we're approaching. And the TPA and CMS is going to have to provide guidance on managing those disputes. But what I would suggest is that as soon as you are aware of that, you would note that on your payment confirmation report, that I've expected to receive $100 and I only received $0. The amount that you would note then would be $0. So the TPA would have access to that information. I would also follow up with them. The expectation is that those are not going to carry over to other quarters. They'll be resolved within the quarter they're in. So the plan sponsor really needs to ensure that they get those payments to the manufacturers within 38 days. As we know, the TPA hasn't really provided guidance on the what ifs. So what if they don't? And those are the things that we're going to be hitting as we go along in the process. But definitely something that you want to communicate and track immediately. So the question here is, payments only EFT, or can you send some in as checks? No, it's only EFT payments. So you'll only receive, for specific to the coverage gap discount program, payments going out from manufacturers to claims sponsors are EFT, payments coming in are EFT. There's no check handling as a part of the coverage gap discount program process. So the next question is, will this slide deck be provided to attendees? So the slide deck will be made available to attendees via email in about a month. But if you have specific questions, you have my contact information and you could follow up with me via email. So we're just going to take one more question. And then we're going to move to closing with timing. But any questions that we didn't get to, as I mentioned, we'll reach out to you directly with the answer within the next week or so. So the last question I'm going to take is, do you have a sense of the volume of negative payments that will be received? This really just, the volume of what you receive really depends on your organization, but what we've seen, the volume is very low. So the dollar volume is very low, but the quantity of invoices could be large. So for a large organization, it could be 1% of your dollars that you pay out, but it could be 20,000 invoices in a year. So it really just depends on the size of your organization. But it's considerable, given that you can go back up to 17 quarters in this process. So they're going to be adjusting PDEs constantly. So even if it doesn't affect your organization right now, it could affect your organization in the future. So you need to be aware of how to handle it. So I would say that really depends. The volume of what you'll receive really depends on your organization. So with that, I'm going to close the question, and I'm going to hand this over to Eric to close out the webinar. And if we did not get to your question, we will follow up with you directly. Thank you for your time this afternoon.
Great, thank you, Shannon. That concludes our webinar for today. We hope you're able to find this information useful as you move forward in 2014. If you have additional questions, feel free to reach out to Shannon. Her email address is listed on the next slide. Thank you for joining us. We understand your time is valuable and appreciate the time you took to be with us today. If you have an additional 2 minutes, we'd appreciate your feedback on this webinar and your thoughts on the direction for future topics in the survey. As a quick reminder, a recording and the presentation of this webinar will be sent out to you via email within 48 hours and will also be available on our website. Thanks again and have a great day.